Hello everyone. Today I want to talk to you about the advantages of using seller financing to get your home sold faster and for a higher price in today's tough high interest rate market. I'm Tom Day with eXp Realty, coming to you from Pompano Beach, Florida. Most homeowners will shrug off owner financing because it seems too complicated or too risky. Just give me the cash, please. It really isn't as complicated as you might think. So stick around and I'll explain to you why you should give it more consideration. I hope that if you find this information useful, you'll please subscribe to my channel and hit that like button for me. Seller financing used to be much more common before interest rates were near zero. It's also known as a purchase money mortgage. For the last decade or so, we've gone through a period of unusually low interest rates. This made seller financing less advantageous and less common. Things have changed. As you know, in recent weeks, rates have accelerated upwards. As of today, October 2023, rates are almost 8% and still rising, nearly triple what they were 2 years ago. This has really put a damper on demand and made homes less affordable. We have to come up with more creative ways to sell real estate. Sellers that offer financing open up their home to a bigger buyer pool, make their home worth more money, and create a new stream of income all at the same time. That income stream is secured by an asset that you are very familiar with. You can set your own rate and terms depending on your goals. The more competitive your rate, the better the price you will likely get on your home. I understand that most people don't want to be tied to a mortgage for a long period of time. Seller financing, however, can be amortized for a 30-year term, so the payments are reasonable for the buyer. But a typical seller finance loan will have a balloon payment after 5 to 10 years or whatever time frame can be agreed upon. That means that the remaining balance must be paid off completely by the borrower, whether through the sale or refinancing of the property with a different lender. Imagine two very similar homes in the same neighborhood. One is offering financing, so the buyer is going to have to pay 7.5% or more. You can offer 6% to a buyer, or maybe even 5%. Which home is going to sell for more? To illustrate this, a mortgage payment for a $450,000 loan at 7.5% interest is almost the same for a mortgage of $500,000 at 6% interest. Which home is going to sell for more and faster? With home buyers, it's all about the monthly payment. At the same time, a 6% return is pretty good for you, the lender. You would be earning about $30,000 a year in this scenario, in addition to the better profit you'll make on the sale of your home. There are tax benefits to owner financing as well if you are subject to a large capital gain. On your primary home, a single person is exempt from the first $250,000 of capital gains and $500,000 for married couples. If you have capital gains above that, you can defer them when you're spreading out payments over time. Consult your accountant or CPA to see if this will work for you. If you are selling an investment property, you have no such exemptions, so the tax benefits are even better for investors' non-primary home. You will need an attorney, of course, to draw up the mortgage and note. These costs can be borne by the borrower. You can even hire a mortgage service company to service the loan for you. You won't have to have any further contact with the buyer. They send out statements, collect payments on your behalf, and even escrow taxes for the buyer. Here's something else you may not have realized about seller financing. The note that is created is an asset. You can borrow money against it using it as collateral. You can trade it for another asset. You can sell the note if you decide you want or need the cash at some point in the future. You might have to discount it some depending on where interest rates are at the time. One more benefit of seller financing is a property can close quicker. With typical bank financing, the loan underwriting can take 30 to 45 days. Not so with seller financing. We all know by now that demand for real estate is way down, and that's because both interest rates and values have soared recently. What's keeping you from offering financing? I'd like to hear your thoughts. I'm Tom Day. Thanks for watching.